Hello and welcome to NDTV Profit. Joining us today is Mr. Nitin Rakesh. He's the CEO of Mphasis and CFO Manish Duggar. They're speaking to us a day after the company declared its third quarter earnings, where the revenue rose about 2% quarter on quarter to about 3,340 crores. And while the EBIT margin actually came off about 57 basis points to 14.89%. Net profit was also down about 4.7% to 373.6 crore rupees. Mr. Rakesh, Mr. Duggar, welcome to NDTV Profit.
Thank you.
My first question is to you, Mr. Rakesh. We see that there is a margin hit in the third quarter. What can be the reasons? Is it due to the Silverline acquisition that you made in the third quarter?
Yes, I think if you kind of look at the reported numbers as against the 14.9 that you're seeing in the reported line, if you normalize it for the acquisition, that EBIT is actually 16%, which is a 50 bit expansion from Q2, despite a seasonally difficult quarter in Q3. So I think we're very pleased with the fact that at an operating level, we've managed to expand the margin by 50 bits at an EBIT play, and even gross margin has expanded. Bulk of it is driven by operational efficiencies and the levers that we were able to pull to manage the profitability in a difficult quarter.
So essentially what you're saying is that you didn't face any issues because of furloughs, again, because you're saying that this is a seasonally weak quarter.
I think furloughs definitely plays out in the seasonality impact, and furloughs were a tad higher than what they normally are in this quarter. And I think that's a phenomenon that you've seen across the industry as well. If you adjust for just the impact of seasonality, including furloughs, I think the revenue also has been fairly stable and the margin actually has expanded.
Okay. Mr. Duggar, coming to you, Mr. Rakesh mentioned about the revenue and also the Silverline acquisition that has happened so far. So while the Silverline acquisition hit the margins, so to speak, has those synergies from the Silverline acquisition started reflecting in your revenues? Can you give us a color on that? What are the synergies? What are the benefits? Have they started accruing from that deal, sir?
As we have spoken about it earlier, primary thesis for our acquisitions is capability-led, and Silverline is no exception. We talked about the fact that we consolidated the revenues of Silverline for the full quarter, and we have also disclosed that that number is approximately $15 million for the quarter. So all of that $15 million was an incremental revenue we got this quarter over last quarter. Because it is capability-led, the expectation is that this capability will help us expand our TAM with our customers and make us able to sell and provide services that we were not able to do before. And hence, a large part of what synergies are expected are from being able to sell this capability and scale our accounts even further. The pipeline and the conversations that we are having with our existing Mphasis clients using this capability has been very, very positive. And we have already been able to close a few transactions. Given it is 2.5 months since the acquisition, some of these will take a while, but we are very happy and confident that we will be able to do the plan, if not better than the plan. In what we assumed we will be able to deliver with these capabilities in our Mphasis accounts.
So how much do you expect Silverline to contribute to your top line going ahead? If you can give us that quantum at about 15%, 20%, how much do you think it's going to bring in? You must have that target, I think.
So, the objective of all these capability acquisitions is to be able to provide more and fuller services to our clients. And when we do the acquisition, the assumptions that we make are primarily driven by what we see as a visibility at that time. Given what we have been able to deliver with our earlier acquisitions, and while we don't give out a number either for them or for this going forward, but in all those cases, we have been able to do much more than what we expected when we did the deal from a synergy perspective. So I would refrain from giving a number, but I can assure you that we are very happy with what we are seeing right now. Compared to what we expected from Silverline in terms of our ability to sell to our clients.
Yeah, I think if I can just add to that, as we integrate this capability completely into our practices and competencies, we probably won't even need to track that number separately because it will become fully embedded into each and every one of our existing customers as well. So I think it's fair to assume that this was a gap in our competencies that we needed to fill with the Salesforce capability. there is a pretty big demand for infusing AI in customer experiences, which is exactly where I think the intersection of Salesforce, contact center, customer experience transformation, and AWS and other cloud providers are coming through. So I think it's an interesting one from that standpoint. And if anything, it'll actually expand the ability to provide services to existing customers. So I think instead of focusing on what the standalone number or contribution will be, we'll be more focused on driving TCV wins and revenue in using this competency.
Okay, you mentioned about TCV and the revenues, and my next question was actually that only. Your TCV is at about $241 million in Q3, and your DSO stands reduced by 1 day sequentially to 69 days. So against those metrics, what is the sense you're getting as far as conversion of deals into revenue is happening? We had seen in the past that the deal pipeline was elongated, it was taking longer. So what is happening now? And do you think the length of the pipeline will shorten here on?
I think a very valid question. I'll get Manish to talk a little bit about the DSO. I think we're very pleased with the operating metrics, both on cash collection and the DSO, as well as just the overall rigor with which we manage the whole function. In terms of TCV, I think we had talked about the fact that we had a bumper first half of the year. I think we're pleased with the fact that in a seasonally difficult quarter, we still had 4 large deals. We have definitely seen some uptick in TCV to revenue conversion in the recent few weeks. Again, green shoots, too early to call. Cautiously optimistic that we will be able to consume a lot of that sold book of business that we had sold in the first half of the year as we get through Q4 and early Q1. So some green shoots. I think the little uptick in discretionary deals, short-term organic growth visible, especially in BFS. So I think, as I said, I wouldn't say across the board, lift, but definitely some early signs of not only stabilization, but uptick as well. And we are right now very, very focused on driving that conversion from TCV to revenue as we go through Q4.
So essentially what you're saying is you are seeing any green shoots in discretionary spending right now, as far as BFSI is concerned?
Yeah, I think in pockets, even within banking, in pockets, we've definitely seen, and I think we called this out in the press release as well, that there is a duality going on in the customer base right now. On one hand, they're very focused on driving cost out, and they're still very focused on the macro headwinds. But on the other hand, there is a very strong realization that they have to find value by adopting technology such as AI, whether it's Gen AI or conversational AI. They have to find ways to transform customer experience. They have to find ways to upgrade, the entire tech infrastructure, both applications and data centers. So I think there is a bit of a duality in play, but that's definitely given a little bit more boost to some early signs in 2024.
So, Mr. Duggar, does this duality that Mr. Rakesh is talking about extend to how your segmental performance has been? We see that the TMT revenue has declined by 8.5%, but that's been offset by a slight increase in BFSI and logistics growing by almost 9% quarter on quarter. So, is a duality also in play in the segment space as well?
So absolutely it is, and some of it is also complicated by seasonality and silver line. So we believe that if we were to normalize for seasonality, which is largely furlough and less number of working days, TMT would not look like it is looking currently. And as we go forward, given the pipelines and the deal wins, we believe that BFS and TMT will lead the growth. So, but yes, duality absolutely is playing at a segmental level as well.
Okay. My final question, if to any of you actually, 50% of your total revenue, almost 50% of your total revenue is still coming from the top 5 clients. So are you worried about the revenue concentration in the top 5? Or are you looking to expand this further so that, I mean, if there is some shortfall or if there's some climb down on some of the deals or climb down on some of the deals, it should not affect you. So are you trying to widen that pool, sir?
Yeah, I think, again, for the last 4 or 5 years, we've been executing on a revenue diversification strategy. I mean, if you remember 3 or 4 years ago, we had almost 30% of our revenue was linked to DXE. And we managed to diversify that in a way that it's now less than 3%. And that was very much part of a strategic design of expanding into newer verticals, into newer geographies, and into clients outside of the top 5. If you then look at what we've managed to deliver, we've actually created 3 or 4 new engines of growth. We've added verticals such as TMT, logistics and travel, as well as healthcare that sits in others right now for us. We've also seen massive acceleration in our new client acquisition business. Even in the current quarter, our new client acquisition revenue has grown at 25% YOY. Our client growth outside of top 10, 11 to 20, and 21 to 30 has actually been in healthy double digits as well. So I think this is a constant work in progress. We are very proud of the fact that we have some very large relationships because they give us referenceability, scalability, and the ability to take those learnings and transfer them across client segments as well as across new verticals. So the revenue diversification play is very much in part of our strategy, both short term, medium term, and long term. But more importantly, I think we are pleased with what we've executed to, and we'll continue to drive that forward.
Okay. Finally, you're saying that the clients are also accelerating towards newer sources of value such as AI to stay ahead. Against that backdrop, how are your client conversations shaping up at the top of the year? I'm asking you because this is the time around when clients set their budgets for the full year. So what are the client conversations like from the AI perspective? And if you can also tell us, how do you see the rest of the year shaping up?
Yeah, I think if I can give you just 2 big themes that clients are talking about. One, they're still very focused on relentless prioritization of where they need to spend money in 2024. The initial signal of budgets is, I think the budget is probably flattish to slightly higher. Again, it depends on the segment. Even within banking, it's more nuanced depending on who you talk to, consumer bank versus corporate or investment bank versus wealth and asset management. But I think broadly, the first message is we have to relentlessly prioritize because the macro is still uncertain. There are still questions that pop up on the health of regional banks, for example, or the environment from a real estate, for funding standpoint. So I think still some work to do to get through that macro uncertainty. And the second question is, can I do more with less? Which means, can I adopt new tech that gives me high productivity because I have a lot to do. And I'm really focused on driving that value that I can get through adoption of things like AI and contact center automation and adoption of all things such as GitHub Copilot or Code Whisperer. So I think this is the duality that I talked about that continues to be visible in client conversations. But the mood definitely is indicating that there will be spend on new areas because that agenda has to carry forward.
All right. I mean, seems like a green shoot for the industry in 2024. Thank you so much, Mr. Rakesh and Mr. Duggar, for joining us today. Thank you, viewers, for also joining us.